these weren't people investing in the next get-rich-quick type of investment opportunity. They were investing in a business that they wanted to see grow and succeed, create jobs in their communities, and to stick around and be good corporate citizens. That's all good stuff, right? Why are we making it so hard for people to be able to do that? And that's where some changes need to come about. Now, right around when we were doing this, the Jobs Act, which had been signed back in 2012 by President Obama, was finally getting all the rules written about it by the SEC and finally came out in 2016. And that's where we really start to see crowdfunding take off.
Welcome back to Fortunes of the Brave, where we talk with founders and changemakers who didn't wait for permission. They built the path themselves. I'm Lance Woodson, and today's guest is someone who's been doing that for over 15 years. Janice Shade is a systems entrepreneur and financial innovator who believes money should serve communities, not control them. She helped ignite the local investing movement through Milk Money Vermont, Capital Innovation Lab, and now Fundamenta. She's showing everyday people how to fund the businesses that define their hometowns. She's also taught at Bard College's MBA in Sustainability and even wrote the book, Moving Money, which flips the script on what finance could be if it was just built around justice, not just profit. Janice, welcome to the show.
Thanks. It's great to be here.
Janice, before you were known for community capital, you were working inside a major company, seventh generation, trying to bring clean products to market at a more accessible cost. When was the moment when you realized corporate conglomerates just aren't built for impact?
Yeah. I will say they can have impact. They can make positive impacts, of course. But in this particular area that has become so important to me of the topic of wealth inequality, I think that's an area that they're not particularly well suited for. And it came through conversations that I had while at Seventh Generation and talking with, the co-founder, Jeffrey Hollander, my manager at the time, about the need to expand the company's mission to include, expand on the mission, which was to help bring all natural, non-toxic, environmentally friendly products to consumers through their household products. Can we do that also through the accessibility of pricing? Because at the time, and still to this day, the products tend to be a bit more expensive than their conventional counterpoints. There's a phenomenon in the natural products industry known as the green premium, and that's just the understanding that consumers are willing to pay more for products that they consider green. And I used to challenge that and say, okay, we accept that they are willing to, but why do we require them to? Like, why do we use that sometimes as an excuse to be able to charge higher prices if we don't have to? And so I really started to challenge the notion that that products are just inevitably going to be more expensive if they include natural and non-toxic ingredients, organic ingredients, that kind of thing.
I really want to hone in on the moment that changed everything here. You've shared how a finance manager laughed whenever you floated your Million Moms idea. How did that push you to start searching for a new way to raise capital back in 2008?
Yeah, actually, it was my attorney who kind of chuckled at me. And I kind of felt like he wanted to pat me on the head and say, "Oh, that's a really cute idea, but this is the real world. This is how it actually works, and you need to just get out there and pitch angel investors and then eventually venture capital." And that I continue to respect that attorney. We're still friends to this day. And I respected what he was helping me to understand about how capital markets work for startups. And so followed his advice. The path of least resistance at that time was to, go out and try to find a few investors to write me some big checks rather than a lot of investors writing me small checks. So I went down the path, but I never gave up on this idea because I knew in my gut that there was something to this, that I wanted to be able to prove that everyday people who would not qualify as angel investors because they don't meet the definition, the standard of accredited investors, that they should still be able to invest in companies that they believe in.
Absolutely.
And so I tried a bunch of different legal ways at the time. So this is back in the day before crowdfunding was even really a term. It was before Kickstarter existed. And even at the time, Kickstarter started to come out while I was in the midst of it. But at the time, Kickstarter was really only focused on creative products, not for, people who wanted to raise money to write a book or make a CD or that kind of thing, not for a business. So I was experimenting with something I called community supported enterprise. So it's similar to a CSA, community supported agriculture, where you pre-buy products from a farmer. I said,
Okay.
what if we applied that to a business and they would just pre-buy my product? It's not a securities transaction, so it's all perfectly legal. It reduces the legal burden tremendously because it's not a security. But it's just from an operational standpoint and an implementation standpoint, it's really unwieldy to unfold. And that's so it was a good experiment. It proved like people were willing to do it, but on a large scale, it was just inefficient to try to do it.
From there, you started chasing an idea that there had to be another way to fund a business doing good. How did companies like Ben & Jerry's in the early days of state-based crowdfunding inspire you before the Jobs Act and Title III came along?
Yeah, it's through some beautiful lucky timing in this regard. I learned about the state regulation in Vermont that allowed for what's called intrastate versus intrastate fundraising, and learned about how Ben & Jerry's had used it back in the early 80s when they were, still a fairly young company, and were looking to build their first major factory. Fun fact, Ben & Jerry's made their first ice cream in an old abandoned gas station in the middle of Burlington, Vermont. And they were ready to kind of level up, right?
Okay.
So they needed a new factory and used this regulation to raise, I think, over $750,000 just from Vermonters alone. And I think the average investment was something around $112, something like that. So it was very accessible to everyday Vermonters to be able to invest in this company that by that time everyone kind of knew and loved. And it used this regulation that exempted Ben & Jerry's from having to register with the SEC for a national securities offering. In 2014, the state of Vermont said it's time to update that regulation, because this was from the 80s, right? This old regulation needed some sprucing up to accommodate things like the internet that didn't really exist back in the 80s. So they, the department or the commissioner of the Department of Financial Regulation set about to propose this new regulation. And guess who he asked to be an expert witness up at the state capitol in Montpelier? That attorney who I had been bugging for years with all my ideas of, but what if we tried this? What if we tried that? So I like to think that all of those years of me being a pain in his neck got him to say, there's something that we could do about this. And bless his heart, he went to the state house and testified and got the regulation updated. And we were able to do intrastate crowdfunding.
You never know what's going to happen once you start taking action and where it'll go.
Exactly.
That's fantastic. So by 2015, Milk Money, a crowdfunding platform for Vermont's local investors, was really there to find local opportunities. And it ended up raising over $400,000 for 8 companies in its first year. What did it feel like watching your neighbors begin investing in neighbors?
Oh my gosh, it was amazing. Here, I have to tell you, this is one of my absolute favorite stories of a company called Vermont Evaporator Company. They're still around today. They make a kind of backyard friendly maple sugaring equipment. It was started by a husband and wife team. They had just moved to a new home in Montpelier. They had some maple trees. They wanted to make maple syrup with their family, realized that the equipment that they needed just wasn't available. You either, put a big kettle on top of your Weber, your Weber grill, or you do it inside your house and, get all sorts of sticky mess all over your house, or you have to go and spend a couple $1,000 to buy the full equipment for a sugar house to do the evaporating, the process of turning sap into syrup. And the husband was like, I know how to fix this. So they came up with this new device that they could use, much less expensive than a full sugar house. Anyone could do it in their backyard. They made, I think, about 10 of them, put them up on Craigslist. They sold like that. And they said, I think we're on to something. Let's start a company. So they came to Milk Money to help them raise money. So as we were getting them prepared for their crowdfunding campaign, part of what we did with Milk Money was to help them think through the outreach strategy to be able to get their campaign up and running. Because we knew it was going to take a lot of effort on their part to reach out to get the number of investors they needed. So big thing we told them was get all your friends and family, kind of circle them up. You'd like to get, a good chunk of the money that you need just from your friends and family so that you can show on your campaign page, you show some traction, right?
That's really good advice, especially for the time.
It's still, exactly. And it still holds true today. But my favorite part of the story was, as they were starting to get their campaign going, part of what we had to do was we had to process, Milk Money processed all the paperwork for all the investments. And we had to have the CEO, the wife part of the husband and wife team, she had to sign off on all the paperwork. So we would send it off to her for a signature. And the very first time we presented her with paperwork that she looked down and she said, I don't know who this person is. It wasn't one of her friends and family. It was a stranger who had just found her story online and invested in her. And we all got a little teary-eyed because it's like, it's working. This is beautiful.
It absolutely is. How did that experience really shift your expectation on who could actually be raising capital for their business?
Yeah, it proved beyond a shadow of a doubt that not only is there interest from what I like to call citizen investors, but also the energy to go through the process of doing the due diligence to make an investment, and so that there's so much potential there from these citizen investors to invest in businesses that they believe in and that they want to see stick around for the long haul. These weren't people investing in the next get rich quick type of investment opportunity. They were investing in a business that they wanted to see grow and succeed, create jobs in their communities, and to stick around and be good corporate citizens. So that's all good stuff, right? Why are we making it so hard for people to be able to do that? And that's where some changes need to come about. Now, right around when we were doing this, the Jobs Act, which had been signed back in 2012 by President Obama, was finally getting all the rules written about it by the SEC and finally came out in 2016. And that's where we really start to see crowdfunding take off. Even though it was a slow ramp up from 2016. It wasn't quite the silver bullet answer that a lot of us in the community capital world were hoping to see. And I have some theories on that I'm happy to share if you're interested.
I would love to dig in. Keep going. This is fascinating.
Yeah, I really think one of the things that I'd already learned with Milk Money since we launched in 2015 and got a head start on doing these campaigns is that, yes, people were willing to go through the effort of finding a company on a website, downloading their documents, reading all the way through it, signing on the dotted line, doing all those kind of things. And it's usually for a company that they really believed in. Now, are they going to go back to that website? Are they going to build a whole portfolio of these kinds of investments? That's where we started to see traction slowing down for Milk Money, is that it's a lot of work to do that kind of due diligence and even just the research before you get to the due diligence stage to find enough companies to put into a portfolio. And that's what I believe has been part of the reason why crowdfunding writ large on a national scale has still been somewhat slow in the uptake. It's just a lot of work. And there's a lot of education that needs to happen at the investor level, which is why after that experience with Milk Money and then seeing the national platforms take off, we decided to slow down. And we didn't really need a state-based platform anymore because there were national platforms. That's when I started Capital Innovation Lab as a financial literacy mission to help community members learn about, understand how they can invest in their communities.
You mentioned that overcoming the hurdle of I have to bring investors and getting the momentum of other investors are coming to me is a slow uptick. And that's exactly what is still relevant in driving the conversation today. So literally yesterday, I'm talking to a securities attorney, one of the big names that anyone in the crowdfunding space would know. And he point blank flat out said, if you're engaging Start Engine or WeFunder or whomever, and you expect their millions of investors in the space to come to you, it's not going to happen. Even that his clients today are seeing 95% of their investment coming from their own warm market and 5% from the internet investor that's doing the due diligence. So much of what we do is really driven by helping people aggregate a micro community around them and working on focusing on that, because like you're saying, you have to have that to be successful. You're not going to just show up, build it, and people will come. Like you're saying, it's the work, and the work is what makes the critical difference. I want to continue talking about moving money out of Wall Street and into Main Street, though. You said that your mission is to get investors to move their portfolios out of Wall Street and into Main Street. Why is that shift so critical, especially right now?
I think it's more important now than ever because our small businesses are really the backbone of the American economy. Small businesses, small and medium-sized businesses employ, just over half of all of the workforce in the country. And yet many of them struggle to get the capital that they need because, many of them are, the only option available to these businesses is typically bank loans. These aren't the companies that are going to grow big enough to IPO someday. That's not their goal. And therefore they're really not then attractive to, the folks who make up the angel investing world, the venture capital, private equity investors. They're looking for, the company that's going to, have the rocket ship trajectory and go through an IPO or get acquired, not necessarily the companies that are just going to, be putting down roots and being financially successful, turning over, some nice profit year over year, but not, not in the 10x or even the 2x realm, maybe more like, 10, 12, 15% a year. So how do companies like that get access to capital? And how do investors like us find ways to invest in these businesses that we see have the staying power to stand the test of time, make it even through COVID, some of these businesses that have, kind of really weathered some tough storms and continue to provide a nice little return on that investment versus the, dare I say, gambling, that is really more what I call, investing in the stock market is more akin to gambling these days. Everyone looking for the, how high is up stock price versus and that's why I think it's so important, both from our economy standpoint to support the businesses, but also as investors, that we're not expecting to, to hit the jackpot with the latest investment. Just, I need a safe place to put my money where I know it's going to be making a nice return and be there when I need it and continue to grow and build over time. I think local investing is that pathway.
Do you think people truly realize that they can invest in their own local communities and that those returns can be both financial and social? That's a simple answer, and I agree.
I think it is I would call it a best kept secret, but it's also still really hard. The securities regulations make it, even with crowdfunding, still make it difficult.
For me, I literally needed someone, I always knew that Wall Street raised billions of dollars and made billions of dollars a year, and that was always there as long as I was aware. I truly needed someone to sit me down to help me realize what was possible directly in front of me. Connecting those dots is such a large mental hurdle if you're not already in that space.
And I'm curious to know who sat you down and told you that. Where did you learn it?
You know what? I ultimately wound up needing to get into business with someone that had the experience, that had worked up and down Wall Street, and that was really the access to the knowledge. And I had to have a natural curiosity, a natural interest in the topic to then seek out the knowledge. But without access to it, at least pre-AI, you're just not going to get there. And now you've got AI, and AI is amazing, but it's also not going to give you great advice unless you know enough to ask the real questions, and it won't get you there by itself. So having somebody to guide you through it truly, well, for me, it shaved decades off my life, I'd suppose. It was a significant leap forward in my own life. I've been an entrepreneur with bootstrapping my way, that then was given access to Wall Street capital, and I saw the difference it made in my own path. It's life-changing, and it makes all the difference in the world being an entrepreneur without capital and one that can access it. One thing that we see every day at Planet Wealth is that people have incredible passion. They don't have a pathway. You've helped design those pathways. What's the biggest barrier that still keeps people from saying, I can do this? What's holding them back, do you think?
From an entrepreneur standpoint or an investor standpoint?
From an entrepreneur standpoint.
Yeah, entrepreneur standpoint. I think there is still this just baked in belief that it's easier. Like, I'm either going to go to the bank and get a loan, and if I can't get a loan, then I'm going to go and I've got to find the sugar daddy to write me a big check, or a couple of them to write a big check. They just don't know what's out there. So this is a part of one of my biggest projects I did through Capital Innovation Lab, was to develop this entrepreneur educational tool called the Money Map that helps them to understand, first of all, where they are with it. Like, where are you with your business, and what do you see as the long-term prospects of your business? And long-term, I say 3, 5, 10 years. Like, where do you see your company in those timeframes? And then where do you see yourself within it? If you see yourself as growing it quick and selling off to somebody else, great. There's a pathway already built for you, and it's the angel and venture capital path. And there's nothing wrong with that. Follow that path. But for so many other entrepreneurs who are building their dream business, they're really putting their heart and soul into something that they believe in, that they want to run and grow and see mature over time. What's that pathway? And so helping them to understand there's more out there than just having to get on the Shark Tank circuit or trying to get the time of day from a banker when you're still a 1, 2, 3-year-old business. There's more pathways to doing that. And I think this is information that I know this is information that entrepreneurs desperately need. I've run numbers of cohorts with entrepreneurs and taken them through this Money Map curriculum and helped them to open their eyes to the possibilities of different ways of accessing capital. And, a lot of these, we did one of the last cohorts that we did through Capital Innovation Lab was through the Vermont Women's Fund, and was specifically looking at women entrepreneurs who are a special breed of entrepreneur. I think, especially when it comes to capital, with many women, there is just that, dare I say it, it's a fear of not knowing enough, not being ready enough. And so they're just, I'm going to grow my business organically through my own efforts. And so many women-owned businesses, I believe, never reach their full potential because of that that reticence to access outside capital, and we need to help them understand there are other sources available. Fun fact, with crowdfunding platforms, some of the most effective crowdfunding campaigns tend to be run by women-owned businesses and those run by people of color.
Extremely undercapitalized communities as well.
Yes, good point.
How do you combat that mindset that accessing capital or investing is only for the elite?
By, first of all, helping entrepreneurs gain some financial literacy and that confidence that comes with knowing that they understand the capital world and that they're not, because I think a lot of it is, these are really intelligent, motivated, just really exciting people with great ideas. They're not finance experts. They don't speak the finance mumbo jumbo, right? And it's easy. I think the financial community has made it particularly easy to bamboozle people with our jargon. And that, I think, is something that needs to be addressed. And it's very easy to address, to help give people just that common language, the common understanding of what people are talking about when they come offer you, a term sheet, and they, or different terms for a loan. Just being able to give them that confidence to walk into a conversation with a potential capital partner, feeling like the playing ground, the playing field has been leveled, and that they're not in the lower part of the power struggle. I think there's definitely power politics when it comes to entrepreneurial capital.
So much. It's not that the material is difficult, but it is jargon, and it is and does require a base level of knowledge around it in order to have the conversation. You built the Capital Innovation Lab around the idea that finance should be designed for people, not just profit. What did that look like day to day? And what made you finally decide to step away and go build something for profit with Fundamenta Community Capital?
This is an interesting story. I'm going to answer the second question first because it will drive the answer to the first question. The main reason I stepped away is fundraising for Capital Innovation Lab itself as a nonprofit was really difficult, and it got to the point where that's what I was spending more of my time on, was just fundraising than doing the actual work. And why it was so difficult is, I believe, because here's a nonprofit talking about finance and capital and investing. These aren't words that nonprofit, the philanthropic donors typically hear when they're looking to make grants. How many times did I talk with, a grant maker who said, well, you should just go talk to the venture capital guys and get some money from them. I was like, no, you're missing the point. I'm trying to help those people who aren't, on the radar screen of the venture capital funds. And it really is about building local economic resilience. Like I tried every way to meet the language of philanthropic donors to help them understand, like, this really is about local economic resilience, and community building, helping small business owners, especially in underprivileged neighborhoods. And so it was tough. And that's really why I've moved on. After 7 years, I needed a break from the constant fundraising. And to be honest, I kind of feel like raising investment capital for Fundamenta just feels, it's grittier, but it's more direct. Like, I know what to expect. The philanthropic world was so
more
opaque.
Nuanced. Gotcha.
Yeah.
Was that shift mostly just about getting closer to the action and turning ideas into movement? Or was it something swimming uphill that...
No, there was a lot of it. It's like, I want to be doing the work that I see that needs to happen and not be kind of distracted by, what it takes to, run and manage a nonprofit. So, it just felt a lot easier to do. And quite honestly, I mean, I'm a business person. I've always been in business. So nonprofit management, it's a different animal, and there are similarities between for-profit and nonprofit. There are principles and techniques and methodologies that can and should be used from the nonprofit world and the nonprofit world, but the funding structures are just so different.
That makes sense. Janice, you've worked in rooms with billion-dollar budgets and in local coffee shops with founders just trying to make payroll. What has this really taught you about what wealth really means?
Oh, that's a great question. Yeah, it's seeing seeing the investors who invest in some of these small businesses and the pride that they take in saying, I helped make that happen. To me, that's wealth. That's what community wealth is all about, is seeing that I helped to create or support this business that in turn is bringing new people into the area or helping all of our property values go up. That is wealth generation. It really makes it about all of us in this together versus how much do I have in my personal account, so that I can, take pride in my personal pile of gold is bigger than yours. It really is that much more cooperative and collaborative approach to wealth and understanding that wealth comes in more than just monetary terms.
Absolutely. I can't say enough that focusing on empowering Main Street truly changes communities and it improves everyone's position. And like you said, the greatest employer of everyday people and people in America is small business, and anything we can do to empower them, it truly rises the tide for all the boats. Do you see a line in the sand between making money and making meaning, or are they truly intertangled?
That is a philosophical question I have wrangled with for a good chunk of my life. That's a soul searching question. And I have come to a place where I've kind of I have imagined worlds without money. I've even, tried to write some, like sci-fi short stories about what would a world look like without money. I've researched deeply into the origins of money, and I have finally made peace with money. And I do believe that money and meaning can coexist. And for the foreseeable future, they have to coexist because that's the way our world is structured today. Money provides some very important functions in our communities. And so that's helped me. That's kind of how I've made peace with it, that it's not just all evil. But I think it's very easy to kind of find the lure of just a little bit more. And if I had just a little bit more, and that's where I think as human beings, as members of this planet, we all need to start to really talk about with ourselves and with our families and with others about how much do I really need and how much is enough. That's a concept I don't think we talk about enough. We don't talk enough about, how much do you really need to live a happy life? And if you had more, could it actually, does more money lead to more happiness, or does more money actually start to where's the tipping point at which more money starts to chip away at your satisfaction with life? That's a question that I think needs to be explored a lot more deeply.
At the end of the day, it's really, the way I see it is it's a tool, and what you choose to do with that tool is going to determine what you're building and more importantly, what its longevity looks like.
Well said.
Janice, you're a teacher, an innovator. What's the one thought or challenge you'd like to give to the next generation of investors and crowdfunders?
I'm going to start with a quote that has become my mantra. I came across it when I was working at 7th Generation 25 years ago. And this is what I want, especially the innovators to think about is that it's a quote from Buckminster Fuller, who says, you don't make change by fighting the existing reality. You make change by creating new paradigms that make the old ones obsolete.
Oh, that's good.
Oh, it's been my mantra, my driving force for a long time. That you can't change things by just trying to chip away, and another great quote from Audre Lorde is, you can't dismantle the master's home with the master's tools. That means we need to come up with new tools. I think crowdfunding is one of those tools. It is starting to dismantle the wealth building structure towards more dispersed and distributed means of creating and distributing wealth. And so this is the kind of innovation I want people to think about. How can we, not just think that's the way it's always been, that's the way it has to be, really start to think about what could be and then figure out a way to make it happen.
At Planet Wealth, we talk a lot about community as a catalyst. Hearing your story, it feels like you've been proving that for years. What do you think needs to happen next for capital access to finally match community potential?
I think it really is just a matter of helping people understand what's possible. We have the means at our disposal right now. Even with current regulations in place, we've had enough changes to the regulatory environment, and there's enough proven track record of these community capital type infrastructures to work. Now we just need to get the word out about it. Case in point, about probably 6 or 8 months ago, I was out walking my dog, met up with one of my neighbors walking her dogs, and it was actually right around, it must have been in April, because it was right when the tariffs were hitting, and everyone, the stock market was going nuts, right, with with all the uncertainty around the tariffs. And my neighbor had said, my husband, and she's older, she and her husband are retired. She's like, we pulled our money, a lot of our money out of the stock market, but now I don't know what to do with it. And I said, why don't you put it in Vermont Community Loan Fund, and which is a CDFI that's been around in Vermont for 35 years doing amazing work and allows non-accredited investors to invest. Not all CDFIs do. And that's the thing. She's like, what's Vermont Community Loan Fund? Like there are these ways for people to take their money out of Wall Street and be putting it into local investments, and we just don't know about it. So we need a huge marketing campaign to let people know about what's available. Can you do that?
Explain CDFI to our listeners. They're not, we're unfamiliar with that topic.
Thank you for calling me on the jargon. I'm happy to explain it. CDFI is a community development financial institution. That is a designation that a financial institution has to apply for and be approved to be considered a community development financial institution. They're typically loan funds, and they must be mission driven. They have to have some kind of mission within a community. Very often you see them in underserved communities that don't have any kinds of bank lending or other sources of capital. The Vermont Community Loan Fund has programs that focus on women business owners, that focus on affordable housing projects. That's what a lot of CDFIs are focused on, affordable housing, and helping business owners who are overlooked, marginalized by traditional sources of capital. There are, I believe the latest number I heard, there are about 1,400 CDFIs across the United States. About 90 of them allow non-accredited investors to invest in them. Most of them get their money from big institutional investors. That needs to change too.
Absolutely, it does. What would it look like if every city became its own funding engine to drive local change? Let's go back to your sci-fi thinking and how do you envision that?
Yeah, I mean, here's something I've been thinking about recently. So, one of the things that Zohran Mamdani has proposed is, a city-owned grocery stores in New York City, right? I got into a big debate with one of my friends in New York about the viability of this. And the way I think I won her over is thinking about it in terms of a public-private partnership, meaning if, maybe the city starts off owning these grocery stores, but what if it then allowed community members to invest and then own that grocery store? And what if we could have more of these kinds of, jointly owned businesses between, the founders of a company, maybe the employees own it too, and community members could also be part of it. When we can reach that kind of thing, then we really have stakeholder capitalism being put in place where people care. And that's what I think is the greatest outcome of this kind of dream that we're having, right? Is that when people are literally financially invested in their local businesses, they become emotionally invested. They become the best, marketing brand ambassador for these businesses. Hey, you need to go check out their ice cream. I invested in them. It's the best ice cream ever. And it becomes this virtual circle. So I think that, and we're all invested in it because we see that the communal wealth that is created is much greater than just the simple financial wealth that could be created only from a more impersonal investment.
I love that. And you're 100% correct. In my experience, the moment the investor crosses the table from, I'm sitting across the table from you, to now I've invested and we're on the same side, is the moment that all the change starts to happen, and they're truly incentivized, and they can make huge differences that aren't financial, that truly move the needle for the entrepreneur, the founder, the supermarket. Getting them on the same side of the table, getting the community together would be incredible.
It becomes a relationship, not just a transaction.
Well said. I'd like to end our episodes with a fun anecdote about my guests. Can you share a story, a fact, or an experience about yourself that our listeners might find entertaining?
Oh, gosh. Okay, you got to give me a minute to think about this.
Yeah, maybe something that they wouldn't know or would find surprising, or just something, anything you'd like to share about yourself.
Well, here's one for all the mom entrepreneurs out there.
Perfect.
I started my first business when I was 42 years old. 42 years old with 2 little kids. I got started late in life with the kids too. And I remember at the time people saying, like, you're too old to start a business. All the entrepreneurs were in their 20s. And I disagree with that. Like, yeah, there are a lot of hot entrepreneurs in their 20s, but I think there's something about people in their 40s, and women in particular in their 40s. We've been through a lot. We've gained some wisdom, but also a lot of patience. And I think patience is really important when you're an entrepreneur. So it was exhausting because, I was 42 years old. So, would I have had more energy when I was 32 or 22? Yeah. But I really appreciated the equanimity that I sometimes had to bring in the face of all of the crazy things that happen when you're an entrepreneur and all the twists and turns. So more power to people in their 40s starting something that they love and want to make happen.
It's never too late to reinvent yourself. I promise you that.
Perfect.
Janice, thank you for reminding us that community is the underrated asset in the capital raising arena. Your work does prove that when capital moves off Wall Street and comes back to Main Street, local economies thrive. Folks, if you enjoyed this conversation, subscribe to Fortunes of the Brave on YouTube or your favorite podcast platform. Leave us a comment on what impacted you most on this episode. We'd love to hear your take. I'm Lance Woodson, and we'll see you next time. Did this episode help you tackle a mindset shift? Leave us a review on Apple Podcasts. Your feedback can provide actionable solutions to others seeking access to opportunity.